Welcome to Rushing, simplified news for busy investors. This is the first short daily financial audio newsletter made by a woman for the whole busy world that delivers clear headlines and quick context to help you get ready faster before the market opens. In under 5 minutes, you get the top market movers, why they matter and which sectors to watch, so you can act with less noise and more clarity. Everything we offer here is purely educational, not advice, but you heard it many times so you know this already and you are still here. Thank you for this and enjoy. Let's dive in.
First headline: Federal Reserve holds rates steady. What does it mean? The Fed kept the policy rate at 5.25 to 5.50% and signaled a wait-and-see stance. Inflation is still above target, but hiring has cooled and officials want more data before the next move. Why magnify it? Policy tone sets discount rates and equity multiples. A steady hand supports duration and defensives for now, but any hawkish shift can hit long-duration tech and high beta fast. Possible affected sectors: treasuries across the curve, banks via net interest income, utilities and staples, dollar pairs. Second headline: Oil prices surge on OPEC Plus cuts. What does it mean? Brent pushed above 90 as OPEC Plus extended voluntary production cuts through year-end. The tighter supply outlook overshadowed soft growth worries. Why magnify it? Higher crude can rekindle the inflation impulse and complicate the path for rate cuts. It also widens the gap between energy winners and fuel-sensitive losers. Possible affected sectors: energy producers, refiners and services, airlines and transports, chemicals, inflation-linked bonds. Third headline: CPI cools and core eases. What does it mean? September CPI rose 0.2% month-on-month and 3.6% year-on-year. Softer rents and energy helped, and core inflation decelerated. Why magnify it? A cooler print lowers the bar for a policy pause and supports real income. If follow-through continues, the curve can bull steepen and the dollar can fade. Possible affected sectors: rate-sensitive equities like housing and utilities, consumer discretionary, gold and dollar pairs, small caps via cheaper financing. Fourth headline: Tech giants disappoint on guidance. What does it mean? Big platforms beat on revenue but guided cautiously for the holiday quarter as ads softened and supply chains stayed noisy. Heavyweights like Alphabet and Meta fell about 3 to 4%. Why magnify it? Valuation-rich leaders gap when guidance underwhelms. Expect more dispersion inside AI and cloud as investors pay up for clean margins and clear monetization. Possible affected sectors: mega-cap tech, cloud and software, semiconductors, momentum factor funds, index volatility products. Last headline: Bitcoin recaptures 30,000. What does it mean? Crypto rallied as institutional interest ticked up. Bitcoin reclaimed the 30,000 mark on optimism around exchange-traded fund approvals and rising chain activity. Why magnify it? A stronger tape in crypto can signal improving risk appetite and liquidity. It also attracts flows into listed miners and brokers that amplify the move. Possible affected sectors: crypto miners and exchanges, payment processors with digital asset exposure, high beta tech, volatility products. Free way to support is to subscribe, turn on notifications and share it with other people to help them as well. See you in the next episode.